I mean, clearly Elon's just a madman. Everything else in the markets make complete sense, right? He's saying, look, I don't need all this money to operate the business. Actually, the business is in a great position. Talking to the guys on the board of the Federal Reserve, I think out of St. Louis. And he was like, yeah, I mean, the CPI is not accurate.
Elon just keeps coming with the hits here. Everyone's probably, I'm sure, heard of the $1.5 billion Bitcoin purchase by Tesla. And you know that if Tesla's buying $1.5 billion of Bitcoin, Elon has been in Bitcoin and easily put billions of dollars of his own money. He oscillates back and forth between number one and number two wealthiest people in the world, between him and Jeff Bezos. But you know, Elon personally has billions of dollars, and now he's putting actually Tesla's money into the ring as well. So how was the tech coverage of this? Was the tech coverage positive or understanding, or giving Elon credit for possibly hedging some of the risk that not just Tesla, but could be on the horizon? I mean, when you look at equity markets, I mean, come on, gang. Equity markets, I mean, it just doesn't make sense what's going on. Okay. You cannot tell me that there is sound justification for the prices you're seeing in equities in the stock market. There are, I think, significant discrepancies between the multiples that not just tech companies. I mean, these you look at the platform monopoly multiples now, and they're very high. And I think what you're seeing is a byproduct of a series of things, but namely what happens when you print $7 trillion and you have insane quantitative easing and all these kinds of unprecedented actions which have been taking place. That's some of what I think has led to this story around Elon saying that he's actually going into Bitcoin to kind of preserve liquidity and hedge themselves. So this is the information. No one could ever accuse Elon of taking the conservative path. The minute he puts Tesla on financially sound footing, he decides to invest $1.5 billion of the company's cash reserves in Bitcoin, one of the most volatile assets around. Just imagine what he'd do if Tesla had the cash stockpile of an Apple, Microsoft, or an Alphabet. I mean, clearly Elon's just a madman, right? This guy just doesn't make any sense. One of the richest guys in the world, guy is completely off his rocker, right? Why would he ever buy $1.5 billion in Bitcoin? Just because everything else in the markets make complete sense, right? But yeah, Apple, Microsoft, and Google, those companies, each of which have between $100 and $200 billion in reserve, take an ultra conservative view of where to put the money. All three say that their investment philosophy is to preserve and maintain liquidity. And they put their money in corporate bonds, government bonds, mortgage-backed securities, and CDs. Amazon and Facebook do the same thing. So why isn't Tesla falling in line? Huh, Elon? Can't you just get with the program? Then there is Tesla, which revealed today in a filing that it had updated its investment policy to provide us with more flexibility to further diversify and maximize returns on our cash. Interesting, right? That isn't needed for operating liquidity. Let's just think about this. Tesla had only $20 billion in cash. Its business generated just a shy of $3 billion in cash after capital expenditures. So the business is free cash flowing, $3 billion, right? He's saying, look, I don't need all this money to operate the business. Actually, the business is in a great position. We're booking tons of orders. We got plenty of demand. We got positive free cash flows. Including after all of our capital expenditures, right? All of our investments that we're making in the business. So not just on a P&L, on a profit and loss basis, right? Making cars is a very capital intensive business. Thanks, Sherlock. And yet it chose to put some of its cash reserves into Bitcoin. Now, here's the best part of this. Tesla said it may also invest in other alternative reserve assets, such as gold bullion. One thing is certain, though, says Martin Pierce from The Information. This is certain, right? According to Martin. Tesla is taking an unnecessary risk with the paltry $20 billion in cash, $3 billion of free cash flow in the past year. Paltry. $1.5 billion in Bitcoin with the paltry amount of capital it has. Thanks, Martin. Really astute reporting on this one. I actually think this is a genius decision. We had Jim Rickards on the show past few weeks. Jim Rickards, not the biggest Bitcoin guy, but similarly pointing out that these are unprecedented times, gang. And you can't tell me with a straight face that what's going on in the equity markets, in the multiples that these platform monopolies are getting and just continue to get, makes sense. I mean, for Platt's sake, Platt's on fire. Platt's unstoppable, which, I love in that sense for Platt. I mean, it's hard. How do you bet against the platform companies? Look at this. We're 5 weeks into the year. We're 5 weeks into 2021. Platt's up 10%, almost 11%. We're 5 weeks in. It's up 10, 11%. Okay. Makes sense why it's getting a lot of inflows. But I mean, I'm not saying what you should be investing in. It makes sense why platforms relative to the rest of the market continue to outperform, but just valuations don't make sense. Some people are going to try and tell you why they make sense. I'm not that guy. Okay. And to take less than 10% of the company's cash reserves and put it into Bitcoin doesn't seem like a ridiculous decision to me, Martin. And actually, to put it also into other currencies or reserve assets like gold also makes a lot of sense to me. I think can you say to me that there isn't an inflation factor in the stock market right now? It sure looks like inflation to me. We may not be seeing inflation on the CPI index, right? How much do you buy a quart of milk at the grocery store for? But again, I've already talked to people from the Fed about that. And they even admit to me, one of the Federal Reserve governors, I think maybe the guy from like St. Louis. I was talking to the guy at the Aspen Festival conference, which usually happens in June. So this must have been 2 Junes ago. This was June of 2019. I'm talking to the guy. He's on the board of the Federal Reserve, I think out of St. Louis. And he was like, yeah, I mean, the CPI is not accurate. Well, I knew it wasn't accurate, but how did you just admit that to me that it's not accurate? You're from the Fed. And I mean, he had different reasons than I had reasons for why the CPI, and the CPI is, it's like think of it as like a basket of 100 products, right? And you track the price of those 100 products, right? But what you're seeing with platform models and what you're seeing just in the sense of, platform and let's just say Amazon, right? Amazon driving down prices for the basket of those 100 goods, right? So if you wanted to track the price of those 100 goods, if you give a greater weighting to the price of those 100 goods on Amazon versus from your local grocery store or your local retail stores, if you see inflation in the latter bucket, the retail stores for those 100 products, and you want to kind of, because the Fed doesn't like to show inflation, and you want to try and say, well, if we actually track the CPI based upon the price on Amazon, we would actually show net neutral inflation, right? No inflation uptick, right? There's so many ways that platforms are skewing these inflation measurements. Another one I'll give you. We are not tracking any of the produced value on certainly content platforms like any of these UGC, which is pretty much the majority of all the content platforms, right? Think about all the content people are creating on YouTube, on Instagram, on Twitter, on Facebook. The list goes on and on TikTok, right? Is that being tracked in, for example, the GDP trackings, right? No. How is GMV on Amazon being tracked from a GDP standpoint, right? So all of these metrics and KPIs that the Fed is tracking have really fundamental kind of, you could kind of call it like platform leakage, but in the inverse direction, right? It's kind of just platform disruption into how the Fed tracks these numbers. And it just means that there's a wide variance before, let's say, inflation seeps its way into the Fed's inflation tracking metrics. Could we be seeing that in the equity markets before you see it in the real goods? I'd say so. Anyway, I highly recommend you go and listen to the Jim Rickards interview if you haven't. He touches on a lot of this. Also, it's in his book, The New Great Depression. Great book, great interview. There are just a lot of things that I think prudent investors, not ridiculous investors, Martin Pierce, prudent investors who are looking at what's happening and saying, I just don't know if this all adds up. And then you say, yeah, like if I got $20 billion in cash, could I take 7-8% of that and put it into Bitcoin and not be called ridiculous and kind of alluded to that I'm some kind of idiot? Yeah, I think you certainly could do that. Probably pretty astute, prudent decision, I'd say, Elon. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.